Now, traders at Access Bank expect continued weak demand as investors shift their focus to next week Monday's 150 billion naira bond auction. On the T-bill side, the February and March 2025 papers are the most traded at an average yield of 20.4%. Odinaka Linus-Nwokonkwo, Treasury Team Member at Access Bank, joins me now for more market movements. Odinaka, thanks a lot for your time on the show today. Central bank decisions continue to dominate this week, and we've seen the impact on global currency movement so far. For Nigeria now, we are seeing the naira trade at about 1,540 on the back of the CBN's intervention from the 1,650 range against the greenback. For you now, how do you see the currency swing going further as we count down to the Monetary Policy Committee decision announcement, which will come up on Tuesday?
Hi, David. Thanks for always having me. So naturally, what you see when the Fed cut rates is money move to larger other economies where there's a yield pickup. And also in Nigeria, we've seen that move towards the Eurobond space. In terms of our FX, not necessarily because of the US Fed cutting rate. That's not why the NAFEX appreciated. It's specifically because of CBN intervention, which happened yesterday, where they injected about $28 million. So we saw rates appreciate by about 41 naira to around the 1619 levels. In terms of other currencies, that's just natural, what you see naturally, where funds move from the US market to other economies where they see to have some yield pickup. And like you said, pound sterling has appreciated. And also the Bank of England kind of explained when you look at the maintained rate and kind of gave a firm commitment or a firm stance of rate cuts in the near sight.
Yes. And now moving forward to what we should expect in terms of subscription levels for Monday's bond auction, we saw increased interest on the run bonds after the Debt Management Office reduced the offering from 190 billion naira to 150. For you, now, what's your expectation when we're looking at subscription rates for Monday's auction?
Yeah, so just 2 days ago, the DMO released that circular. It was a bit shocking where they reduced the amount on offer, especially on the 2033 bond to 30 billion. The initial market reaction we saw was buying sentiment, but however, market kind of sold off because we've seen a similar trend last auction where the DMO kind of reduced the size to 190. And still oversold at that auction to some a decent level, which was at 21.5 on that paper. So today, market seems to be calling that bluff and kind of people are overselling those instruments. We've seen offers over around 20.15 on that particular paper today.
And in terms of how investors are positioning the sort of offers we are seeing across the T-bills curve, what insight can you provide us?
For investors in the TV space, what we are seeing is a bit of mixed sentiment. On the medium tenor of the curve, there's a bit of sell-off, while on the long end, there's a buying sentiment, and this is due to the yield pickup you see across board. Most of those, the instruments that are being sold off are basically the February and March papers, and the August and September papers are kind of bid in the market currently.
Well, Odinaka would have to leave the conversation here for now. Thank you so much for your time. We have a whole lot to look out for next week, but a wrap for now. That was Odinaka Linus-Nwokonkwo, Treasury Team Member at Access Bank.